Hello and welcome to Climate Bonds Initiative's 2016 webinar series. Today, we'll be exploring the solar criteria of the Climate Bond Standard with Anna Creed, Head of Standards at Climate Bonds, and special guest Uwe from Deutsche Credit Bank. But first, a couple of housekeeping notes. To keep up to date with our work at Climate Bonds and for announcements of future webinars in this series, you can register for our blog at climatebonds.net. If you have any questions as we go through the presentation, please use the Q&A box in the bottom right-hand corner of your screen. I'll collate them and put them to Rob and to Anna, and Uwe at the end. Finally, this webinar will be recorded and sent by email to all those who have registered. Now over to Anna.
Thanks, Johnny. In terms of this webinar, the topics that we would like to cover are what CBI does and an overview of the green bond market development. Moving on to talking about green bond labelling and the role of standards, and then the climate bond standard and certification as a part of that world. And then we will look more closely at the solar criteria that form part of the climate bond standard. And then I'll hand over to Uwe from Deutsche Credit Bank, who's going to talk about the issuer experience because he has issued a certified climate bond. And then lastly, we will have a Q&A session with myself and Uwe, and also we'll be joined by our colleague Rob Fowler, who is the Head of Certifications at Climate Bonds. Okay, so talking about the Climate Bonds Initiative and what we do. Just very briefly, we were created by investors with the aim to increase clarity and structure around climate bonds and understanding of climate bonds. We have 4 main areas of work. The first one is the Climate Bond Standard and Certification Scheme, and that provides definitions for investors and guidelines for bond issuers, and it supports investor confidence through assurance and certification processes. And these are developed through multi-stakeholder engagement, which is a key part of our approach to developing the standard and rolling it out more broadly. The second area that we work on is information flows. So we see a key part of market development being robust and extensive market data. So we do a lot of monitoring of the green bond and climate-aligned bond universe. And the picture that you can see on the slide is an image of the cover of our latest 2016 State of the Market report, which is available on the website if you'd like to see that in more detail. I'll talk a little bit about some extracts of that today as well. The third area of the work that we do is outreach to inform and stimulate the market. And we basically engage with governments, regulators, other market makers in various forms. And we are focusing efforts on emerging markets to try and grow issuance in those markets. We're working in a number of countries, most particularly China, India, and also Brazil and other areas of Latin America. And then lastly, the fourth element is the partner program. And it's a platform for market participants to get involved during the formative stages of the growth of the climate bond world. And it's really for those who would like to get deeper into this space. So please reach out to us if you're interested in that program. Okay, just a very quick recap for those who are new to the field. I just want to spend 2 minutes on a bit of a recap on what a green bond. Essentially, a bond is just a form of debt. It's usually used to finance large and mature assets, and as a result, they're generally issued by large entities of quite a wide variety of types. So they include companies, governments, municipalities, and banks. And interestingly, those entities can often buy each other's bonds as well, so there's quite a lot of interaction in this market. Bonds form an important part of the investment portfolios for investors, particularly those who are looking for more defensive investments, potentially with lower returns but that are more secure, such as pension funds, insurance companies, and institutional investors. There's a common saying that people go to the equity markets to make money, but they go to the bond markets to keep their money. Basically, a green bond is where the proceeds are used to finance environmentally friendly assets. And this has an impact both on who wants to buy, and we hope that has an impact in the world in terms of our attempts to really address and halt and reverse climate change. And in terms of that climate change opportunity, there's a need to raise $50 to $90 trillion to finance a low-carbon transition over the next 5 years. So there's a massive investment opportunity related to climate bonds and climate finance more broadly. And moving on just very quickly, from a climate focus, climate change is about mitigation and adaptation and resilience. And in the investment community, it's really about asset classes. So today we're speaking about solar, but there are other key sectors. A number of them fall into the renewable space, so solar being one, but also wind, bioenergy, geothermal, hydropower, tidal power is a variant on hydropower, of course. Other sectors aside from renewables include low-carbon buildings and low-carbon transport, including rail, bus rapid transit, electric cars, et cetera, And then there are other really important key infrastructure sectors, including water, so assets for water management, also waste and pollution management, waste energy, for example. And then we have, in the land use space, agriculture, forestry, and other associated land use sectors. And I think this slide encapsulates really the key elements, or the majority of the key elements of our vision for 2050. So if we are really going to move to a world where we have addressed climate change as much as possible, given where we are today, these are the kind of categories that we would like to see significant increases of investment in. And these are really the categories where we're really looking to define what green is and divert our investment into those assets and projects. Again, just a very quick overview about green bonds and the growth in the green bonds market. In the early years, so on this chart, for example, I think the first green bond was issued in 2007 by the EIB, and in the early years, even including up to 2012 and 13, the market was dominated by development banks. And in 2014 to 2015, we see a jump up, and that's really when we see corporates getting involved. So there was a big jump in activity in those years. And we, again, are hoping to see another jump in activity in 2016. Already we're seeing steady growth year on year, and we're exciting to see 2016 take off. Our expectation is that there will be $100 billion worth of bond issuances this year, and China, we think, will account for a large chunk of that, 46 billion, based on estimates coming out of the People's Bank of China. And overall, our target is to see really ambitious growth in green bonds, and we would like to see upwards of $1 trillion per year in the not too distant future. And picking up again on information from the State of the Market report, just a quick overview of the really wide range of green assets that are being financed by green bonds at the moment. So we have a big segment here relating to clean energy, and we see a lot of solar and wind. But we also have a lot of green bonds relating to low-carbon buildings and low-carbon transport, and also water and water infrastructure is another key sector with important issuances for municipalities and public entities, as well as some private entities. And in those smaller segments down there, we're seeing exciting growth, for example, in agriculture and forestry. They're small at the moment, but we hope those will keep growing and increase to the size of the other segments as they are today. And just a quick note on the attraction of green bonds. Questions that we're often asked are, what is a green bond? And what's the value of a green bond to investors, especially when it can cost them to deliver a green bond and bring it to market? And this slide just captures some of those values and attractions. So on the issuer side, so the issuer essentially being the borrower, the advantages to them that we often see is they receive investor diversification, so they can bring in new investors that haven't been attracted to buying their bonds before, and that's quite often cited as an advantage of issuing a green bond as opposed to a non-green bond. And those investors tend to be a bit stickier in that they tend to buy and hold their investment in the bond. And at the moment, there's quite a lot of excess demand over supply, so there's quite strong oversubscription in the market, leading to tighter yield. And more generally, there's quite strong messaging around green bonds. It can be, if it's a credible green bond, a very strong PR story for an issuer that they have issued a green bond and are committed to climate-compatible investments and futures. On the lender side, the benefits to them, I guess you could summarize some of these bullet points with the phrase that what's measured is often managed. So for an investor, if they know that the issuer and the asset owner and manager are actually taking account of climate issues, then hopefully the performance of that asset should be solid and reliable and exciting over the long term of the life of the bond. And similarly, they really do investors also see this kind of positive reputational impact, and also a deeper engagement with the company management if it's a green bond, not least because actually the issuer does talk about the use of proceeds potentially more with a green bond than they would do with an ordinary bond, increasing the transparency and visibility over the use of the finance. Okay, moving on to the second section. So in this space, I want to talk about very quickly the importance of green bond labelling and the role of standards. I think the key factor here is that credibility is really important to green bonds. If issuers are claiming benefits from green aspects of the bond, they need to protect investors from greenwashing. As I said, the first bonds that came out, the first green bonds that came out were for development banks. They have strong expertise and strong internal processes. As corporates entered the market in later years, more questions were raised about really the green credentials of the bond. And there's increasing need for what we call a system of environmental due diligence to review key environmental attributes that would complement existing financial due diligence. There are obviously a lot of assets and projects that can be included in bonds, and there's really a lot of uncertainties over climate change risks and opportunities, and the environmental due diligence layer is really to provide a lot of framework and a lot of clarity over the impacts, the climate impacts of those bonds. And it's important to note that actually at least quite a lot of scientific expertise to do this in a credible way, and therefore it's not a role for investors to do this. They don't necessarily have the specialist expertise, and therefore it can be costly to assess and verify this themselves on a case-by-case basis for every bond each time. So the importance of actually having a standard system and a clear way of communicating the green benefits of that bond really cuts down a lot of the work and the time of the investors, which is really important. The principles for a good system of environmental due diligence are threefold, really. One, that they're scientifically robust, that we are actually going to deliver the climate change impacts and maximise the climate opportunities that the scientific community identifies. Two, that the system is transparent. And third, that it's consistent. So like I said, so that there can be comparability between bonds to minimise the work for investors looking across the market. There's three key dimensions to green bond labelling. The first one, which we called REACH, is really what's the sort of programme approach. Are we talking about voluntary or mandatory participation? Are we talking about recommended guidelines or principles, or really fixed standards and requirements? The second element is the scope, and here we often talk about the process of management of the funds and the reporting requirements, and crucially, really what counts as green. And we see a lot of people talking about green taxonomies and green definitions and eligibility criteria in this kind of what counts as green space. And the third key dimension to green bond labelling is really the assurance process and who is doing the assessment process and against what criteria. So a first-party assessment, for example, you would see somebody self-evaluating against their own self-determined criteria. A second-party assessment or second-party opinion is generally an independent assessment, but the independent assessor is assessing against the issuer's own green framework. And then the third-party verification, again, is an independent assessment, but the assessment is against a set of external objective criteria, which were set not by the issuer, but externally, and are common across a number of bonds. Okay, very briefly, just a quick oversight of the evolution in green bond labelling. So I think, as I said previously, initially with the first bonds that came out from development banks, they're generally self-labelled, and 2014 was a really key turning point where we started to see a big uptake in independent verification with second-party and third-party opinions being given. The climate bond standard itself, I think the first version was in 2011, but it was revamped during 2015 to basically build on the green bond principles and taking it further, though, to define a climate-compatible taxonomy of eligible investments and eligibility criteria for a bond to be officially certified, and an assessment scheme that anybody could use to actually make that assessment. And more recently, I think, we're seeing a lot of countries developing their national green bond regulations. And obviously a key example there is China, who are releasing their own domestic regulations at this time. And looking forward, in terms of evolution in labelling and in the market, investor demand for green bonds and climate bonds is really strong and will continue to increase in line with the delivery of credible and quality products into the market. And standards assurance and certification, these are things that investors have repeatedly been calling for as key to their improved confidence and transparency. It's those things that will make it easier to bring mainstream investors on board, to get on board with confidence. So they're really critical to the growth, the continued growth and strength and credibility of the market. And the risk is that if robust standards and independent verification are not used, then green bond labelling might actually lose its impact if there becomes possibly too much fragmentation, too much difficulty in interpreting what it means to be green. And harmonisation is a key part of that, so that we can assure as much as possible cross-territory standards are as compatible as possible. And essentially, obviously, governments might have a key role to play in that, depending on the regulatory environment, to help that harmonisation process. Moving on, just to talk a little bit more about the climate bond standard and the certification scheme. The key features of the standard are that it has clear and objective sector-specific climate eligibility criteria, and this is the part that I was talking about in terms of defining what's green and what's climate compatible. The second key element is it has clear mandatory requirements regarding the use of proceeds and tracking and reporting, and that includes an insurance framework for independent verifiers. And then lastly, it lays out a certification process, certification being done by an independent climate bond standards board, and the institutions on that board represent investors and NGOs with $36 trillion under management, assets under management. It's important to note that the green bond, I think I mentioned this previously, the green bond principles are fully integrated in the climate bond standard. So you can be sure that if you use the climate bond standard and are certified against it, you can be confident that you're fully aligned with the green bond principles. And lastly, there are a wide variety of bond types are eligible for certification under the bond. And it's really important to remember, though, that the climate bond standard is an environmental standard, not a financial standard. So it doesn't replace the need for investors to do their own credit analysis. And in practice, the standard provides clear requirements for issuers and their bonds to be labelled as certified climate bonds. It specifies a certification process which aligns with the normal phases of the bond market, and that includes a pre-issuance phase, where issuers are moving quickly to market, looking at assets that they might fund, and getting assessment over that. And then post-issuance phase is another period of assessment to verify that the pre-issuance objectives were actually met and carried out. There's two components to the standard itself. So there's the parent standard, which includes the general requirements over things like managing the funds and reporting and verification requirements. And then secondly, there's a suite of sector-specific technical criteria. And on the next slide is the climate bond taxonomy, which really shows you the full suite of these technical criteria and these sector criteria. I won't go into this in detail, but again, this is on the website, but you can see that it's cut across a number of sectors which we see as key to the low carbon future. So that includes renewable energy sectors, low carbon buildings, waste and pollution control, low carbon transport, nature-based assets, water, industry and manufacturing, for example. And you can see that we're working hard to fill out this library of criteria. Ticks indicate sectors where we already have criteria, and also we've indicated on here where we're currently working with technical and industry working groups and other key stakeholders to develop criteria for those sectors as well. And we basically are continuing a rollout over the rest of the year to increase those sectors. Just a quick overview of the overall process of certification. As I mentioned, it has two phases. One is pre-issuance certification. So on the first one, the issuer prepares the certification. It creates a green bond framework, and then it provides to us an information form which summarizes how the issuer intends to use the proceeds and other key aspects of how they will manage the proceeds. There's also a requirement for the issuer to appoint a verifier who will undertake a readiness assessment and give us an indication of whether the use of proceeds envisaged by the issuer is indeed compatible and eligible under the climate bond standard. And there are a list of approved verifiers on our website. The issuer then submits updated information form and verifier report to CBI. And as I said previously, the CBI Standards Board confirms pre-issuance certification. And at that point, the issuer can use the certification mark in their marketing roadshows and marketing documentation. And then post-issuance, there's a secondary certification process. So the issuer closes the book and issues the bond. Proceeds are allocated to projects and assets. And then the verifier is called back to undertake follow-on assurance procedures to assure that the use of proceeds have been distributed as they were intended to be. And that information with the verifier report is submitted to CBI. And again, that is submitted to the Climate Bond Standards Board for review and certification. And that certification then is valid for the term of the bond unless we detect a problem with ongoing application of the bond based on the annual reports that are provided to us by the issuer. And just very quickly, the next slide just shows some of the participants in this process. So we've indicated here some of the issuers to date, and you can see we've got a fantastic range of issuers. They include banks, financing groups, public entities, across a number of regions and different types, essentially. And we have an ever-growing number of verifiers around the world, and I think investors appreciate this as a peer group of theirs, which is really helping to build trust and confidence in the system. And I mentioned previously the Climate Bond Standards Board, and on here we have the logos of the institutions that are on our Climate Standards Board. And then moving on to more detail on the actual solar criteria under the Climate Bond Standard. And this really, on this slide, is the detail of the criteria, and it's aimed to be an indicator or guidance as to how to identify projects and assets in the solar sector that are eligible for inclusion in a certified climate bond. I'll take this apart a bit more in the next few slides, but essentially in our 2050 vision of a low-carbon, climate-compatible future, we very much see solar as an important part of the energy mix, hence it being included under the Climate Bond Standard. And as part of that, we see the need for generation facilities, but also the infrastructure around that and other important components which can also be certified under the Climate Bond Standard. So breaking that down a bit, moving on to the following slide. The first point to note really is that solar assets can either be existing facilities or facilities under construction. Bonds generally, given their size and their low risk status, they're often used for refinancing, but this isn't always the case. So we generally see them being used for existing facilities, but by no means is that 100% of the case. The criteria cover a wide range of solar electricity generation facilities, and this includes solar PV, rooftop commercial, utility scale and floating solar facilities, grid-connected or standalone, and they also support a variety of associated technologies to support the solar sector, so concentrated PV or concentrated solar power being two examples. And then, as I mentioned, there's the importance of actually building the infrastructure around the solar facilities, and there is a lot of associated infrastructure important to bringing solar power into the system, and we really do look to support that, and we include those infrastructure elements in the pool of assets and projects that can be included for certification. And this includes wholly dedicated transmission infrastructure. So connecting infrastructure to bring solar power to the main grid is included in the eligible pool. And likewise, equipment which enables the solar power to be transmitted. And then in addition to that, we have the inclusion of other supporting infrastructure, which might include inverters, transformers, energy storage system, plus advanced control systems, which we're seeing in more recent solar systems. And then just lastly, the final piece of the solar puzzle, we also see a wide variety of solar thermal facilities, such as solar hot water systems, which again are eligible for certification under the climate bond. And these might include rooftop solar hot water, solar cookers, and large-scale solar thermal facilities. And these can be facilities that are suitable to low, medium, or high temperature systems. And I think lastly, it's important to remember that solar facilities are often hybrid, and they can have intermittency issues, so they do often have backup support systems to address this. So to incorporate this and reflect this in the criteria, we allow, we require that a minimum of 85% of the electricity generated is from solar, but there can be a fossil fuel backup that can cover not more than 15% of the output. Okay, and then moving on, I'd really like to hand over at this stage to Uwe from DKB, who's recently issued a certified climate bond focusing on solar assets. So handing over to you, Uwe.
Yeah, good afternoon from Berlin. My name is Uwe Jokschat. I hope everybody can understand me. So I'm part of the Treasury Department of Deutsche Kreditbank, DKB. Yeah, and I want to talk a bit about our experience with the Green Bond issue we've done in June. So first, thanks for the Climate Bond Initiative for the possibility to participate here and to talk about our Green Bond and the Green Bond, or the solar approach we have taken. At the beginning, I would like to give a short overview about our transaction. As you can see, we did a 5-year senior unsecured green bond at the beginning of last June. The type of the bond or the design of the bond was based on the green bond principles, so a green use of proceeds bonds, and the proceeds corresponded to wind and solar projects in Germany, only onshore. So that was the design, and now I want to say some words around that and how we came to this point. The Deutsche Kreditbank itself was founded in 1990. It is the successor of the former State Bank of the GDR. And in 1995 it was bought, in fact, by Bayern LB, and Bayern LB is still our mother company until now. DKB has now more than 3 million customers, especially retail customers, but also municipalities and business clients. The total assets amount is now 73 billion euro, of which 62 billion euro are loans to customers in Germany only. So we are really a pure, how to say, client-driven bank. We had a good profit of 225 million euro last year. It was a record year for our operating profits. And we are rated A3 by Moody's and got last year an B- sustainability rating by Ökom Research, which made us the industry leader of our peer group in this sector. So our business model, you can see on this page, hopefully. Our asset, our loan book represents 84% of our whole balance sheet, and we are only active in some sectors. You can see on the right side of the page. This is housing, health and care, local authorities, education and research, and some more. So we focus on only a few sectors, which are mostly sustainable. For instance, the housing business consists nearly only of cooperative and municipal housing companies, and also the rest seems to be pretty sustainable. The focus for the next slides will be the green marked sectors, which are energy and supply and environmental technologies, because these are the business units which feed to our renewable energy business, and I will come to that later because that's the basis of our green bond too. Okay, there's a first question: will DKB issue bonds for projects outside Germany? Now, so we are only Germany focused, and I think that will stay because we feel good here and we make good business, and we have, to be honest, enough growth possibilities in Germany too. But this sustainable business model was only also the rationale to issue a green bond, because we think the green bonds that green bonds are a logical consequence of our business model and will become, or at least that's the goal, will become an important source of our future funding. So the renewable energy portfolio you can see here on page 5 as a basis for our green bond. We do this business now for more than 20 years. We started in 1996. It's a steady growing business here in DKB, and it consists, as you can see, mainly of solar, wind, and biogas financing. And I want to underline that this is only project-based business. So we only finance projects which generate electricity. Is it wind or solar power or biogas? Yeah, and it's 100% in Germany, 100% onshore, and highly diversified, because we start also with smaller sizes like 500,000 or 1 million euro. And I think, I'm not that sure, but I think it's the biggest renewable energy portfolio in Germany, and I think we are one of the top players in Europe too. So what we have done for our green bond program. So as I said, the use of proceeds were only renewable energy loans and only solar and wind projects. So we took the whole business of 9 billion euro, and out of it, for our green bond program, we took the new loans originated from July 2014 to June 2015. That is because we made our second party opinion in autumn of 2015. And from this new business of around 1.7 billion euro, we subtracted the loans refinanced by development banks or agencies like KfW or EIB. And after we have also taken some selection criteria, we got a green bond pool of around 736 million euros. So what were the selection criteria? I show you on this page. So we took only pure customer loans, only project-based, onshore only, newly originated, only from selected legal forms also, with a minimum loan volume of 500,000 euro. And the last criteria was that we had in mind some minimum rating criteria internally. And at the end, we had a pool consisting of either of wind power projects, but here the focus in this webinar is, of course, the solar power projects. You see that our projects are diverted around whole Germany, but with a bit more focus on Eastern Germany. And in this green bond pool, we had 115 loans with an average volume of 3.5 million euro and an average loan term of 15 years. So what was the process within the second party opinion? That may be interesting too, because it's also a question by the investors. How are the frame conditions for instance, for solar power projects during the building phase? Luckily, we have a strong law environment in Germany, so you have a huge approval procedure in Germany. So all our loans, for instance, are based on compensations according to the renewable energy law. That's a special law in Germany, and this law requires some special requirements where and when it is allowed to build a solar plant. Yeah, and for instance, you need a legally binding land use plan, and it is only allowed to build such a plant on so-called ecologically worthless surfaces like former industry areas or alongside high or railways or something like that. So, which means you need an environmental report, you need an additional environmental assessment, and you need also the contact and the conversation with local authorities and the community dialogue until you are allowed to build such a plan. And that's pretty helpful in the discussions also with sustainable rating agency or something like that to give the investor the good feeling that the proceeds are really green. Yeah. This is an example of a project which is in our Green Bond Pool 2. It's a solar power plant in a former industrial area in the Free State of Saxony, it's the southeast of Germany. As you can see, it was a former mining terrain and an area for an aluminium plant, sealed for 19 years, and despite some rehabilitation measures, the whole area is still polluted and not usable really. And there was this solar power plant built and financed by DKB. What we have done too, the good thing is if you have this plans, you already at the beginning of Green Bond process can say what an impact reporting will look like. Yeah? So we can already show the capacity, the predicted energy production per year, and the carbon dioxide avoidance, and that was for most investors pretty impressive too. So yeah, what we've done in this process, we had the climate bond label with the climate bond initiative, which was pretty helpful. We had a second party opinion given by Ökom Research, and we will have within our impact reporting a third party assurance done by KPMG. That was the package we went out with. The transaction was pretty successful. We had our order book for the transaction. The transaction was 500 million euro. The order book was 3 times oversubscribed. We had more than 200 investors, 70% in Germany, 30% abroad. What was the investor feedback during the roadshow? There's a big difference, to be honest, between regarding the green bond know-how in the different countries. For instance, in Germany, the market is not that far like in other countries like France or the Netherlands. There you have some dedicated green bond investors in Scandinavia too, which have more questions regarding the green bond approach and go more in depth. But what we can say is, I think the simpler the structure of the bond, the better. So we had a pretty, simple and transparent approach because we could say, okay, it's only wind, it's only solar, it's only in Germany and onshore, and that was, I think, pretty helpful instead of having a very comprehensive or widespread approach. Yeah, and that we could show the reporting or the impact reporting during the roadshow was a good feature too, I think. And what I want to underline here is that we have had, besides the feedback from outside, a lot of good internal feedback. I think the green bond for every issuer is that is, I think, an important information. It's a very positive story which activates a lot of people in-house too. There are many parts of the company involved because it is a comprehensive project, and I think breaks through some silo thinking you often have. On the other hand, you need, of course, management support, but at the end, it's a good story to talk about, either regarding press attention or the positive marketing effect. So, yeah, that were some words regarding our experience.
Thanks, Uwe. Some useful insights there. We've been joined by Rob Fowler, Head of Certifications at Climate Bonds, for your questions. Just a reminder that if you have a question, you can ask it by using the Q&A box in the bottom right-hand corner. We've already had a couple. Let's start with, what is the opportunity for a fund to issue green bonds on projects originating from developing countries? Any challenges to this? One for you, Rob.
Thanks, Johnny. It's interesting that I suppose the predominant issue here is whether the bond is a good bond before it's even green. And what we find in developing countries is that often there's more challenges around the creditworthiness of the bond or the perceived risk of the projects in terms of their financial performance. So we're very, very keen and very welcoming of green bonds and climate bonds in developing economies and emerging economies, and we see that as an enormous growth prospect. As you saw at the start of the presentation, the amount of volume of green bonds and climate bonds coming out of China in the next few years is dramatic. And so we really encourage that sort of thing. The challenge is very much about the core credit rating or some of the other risk attributes of bonds from those areas. But we're also seeing a lot of activity from multilateral development banks or regional or national development banks to help with the credit quality and provide some credit enhancement, credit support for those sorts of engagements. So lots of deals will come through, certainly, and we expect that the development banks will have a major role in bringing those to market.
One here for Uwe. DKB has a large portfolio of eligible assets. That's Deutsche Credit Bank. Will you be issuing further climate certified bonds?
Yeah, so we want to do that. Yeah, so we want to issue more green bonds. The first thing which is now on our agenda is that we have to renew our green bond program, because our first green bond program was limited to 500 million euros. So we have reached the border already. That was the first try, and we didn't know how it will work. Now we will renew the program, and then we will issue a new green bond. And yes, well, it was very successful with the SPO and with the label too. And I think that could be an opportunity for the next time too. Yeah.
Thanks. One more here. Do you know of issues for PV projects which are currently active in South America? What's the South American scene for green bonds?
Well, what we see in South America is a quickly maturing bond market, and some of the bond markets in that region, the major ones, have been stalled a little bit, with Argentina and Brazil having some challenges more generally across bond issuance. But as we see those national bond markets and regional institutional investor markets come to life once again, we expect to see quite a lot of issuance coming from those areas. Climate Bonds Initiative is very active in Brazil and Mexico, and increasingly in Chile and Colombia, and so we expect to see some fantastic progress in those areas. If you are involved in those countries, then please feel free to get in touch with us. We also expect beyond solar to see different types of activities and projects in those regions. There's a predominance of agriculture and forestry and bioenergy in those areas. So as we see our criteria come to the fore and as we see those bond markets emerge again, we expect to see some strong activity in those sectors.
Another one here. I feel the role of project aggregators is very important. Does climate bonds do any work in this area, project aggregation for green bonds?
Yeah, certainly. This is a really critical aspect of bringing a lot more finance to renewable energy and in particular solar facilities. As you know, a lot of solar is granulated and quite small. There is an increasing amount of utility scale solar, which is up in the hundreds of millions of dollars, but the vast majority of installed solar so far has been fairly small scale and modular. That means that in terms of aggregating those together, there's a lot of work to be done on standardising the contracts that those facilities or assets are implemented under, standardising the lease arrangements, standardising the credit assessments which go along with those. We see some action in the securitised market, and this year, quite recently, we saw an entity in Australia issue a securitized bond and ABS, asset-backed securities with solar. That was the Flexi Group. And they're a mainstream securitization company, so that's their core business, and they realised that they could issue a green or climate bond with the solar assets they had. We're increasingly seeing that sort of securitization happen. But project aggregation is very important, no doubt about it. The challenge in a lot of ways is around the financials behind the aggregation. How the projects link together, what's the financial aspects of the bond beyond the green aspects, and that's really one of the hurdles we need to get through. One of the key areas is creating warehousing for those sorts of financial instruments, and we again see a lot of multilateral development bank action in this area. And the Climate Bonds Initiative has kicked off an initiative called the Climate Aggregation Platform. This is a project funded by the Global Environment Facility and run by UNDP, and it was announced at the Paris COP last year, and we expect to see some real traction with that across 2016. Please let us know if you want any further information about that initiative or want to get involved.
One more question here. Are the globally issued green bonds US dollar denominated bonds? What's the main currencies that are used in the green bond market?
So we've seen a really nice range of currencies so far in the green bond space. A lot of the early issuances were in the mainstream currencies, and we've seen a lot of effort by multilateral development banks to try and issue in a broader range of currencies to encourage that sort of thing. We find that once there's some demonstration that others usually follow along to issue in those currencies. A lot of issuance occurs in North America, so a lot of that's in US dollars. There's also a great deal of issuance in Europe, so a lot of issuance in euro. But what we also see is some of the larger bonds that are being issued. For example, a couple of the Chinese banks are issuing multi-billion-dollar bonds. They're breaking those up into different currencies in different tranches, and one recently issued in renminbi and euro and US dollars in different parts of the world all at the same time. So we're seeing an enormous amount of internationalization of this market. Of course, when you look at different currencies, it can be difficult with foreign exchange risks, and the scale of the investment often requires some hedging of those forex risks. But we do expect to see a greater diversity of currencies and an increasing volume in those, I suppose, second-tier currencies as well.
Thanks, Rob. Any other questions? There's one here. What are the transaction costs for issuing a green bond?
So I suppose that they're broken up into a couple of pieces. For issuing a bond, there are some material transaction costs. To issue a bond requires quite a great deal of legal assistance and other things like that. And so the arranging and underwriting and legals behind a bond can cost. I'm not going to give you an estimate of that. But when it comes to the green labelling or the climate certification, there are two pieces. There is the internal activities that need to be taken care of and the internal resourcing of preparing a green bond framework and laying all that out. And then there's the external costs, which is basically the cost of a verifier to come in and do the pre-issuance verification and the post-issuance verification. And then there's a certification fee, which we charge to try and cover administrative costs. That's 1/10 of 1 basis point of the bond principal. So that means for a $500 million bond, the certification fee is $5,000. The verification fees range a little bit depending on the complexity and the experience of the issuer and how much work is required, but we see those as ranging between $5,000 and $25,000 depending on the complexity of the engagement.
Uwe, would you like to comment on that, the transaction costs of green bonds?
Rob was right. So you have the labeling cost. If you have the verifier, or if you have also a second-party opinion, then the cost range very widely depending on who's the verifier for the SPO. I think there's a lot of space to negotiate, to be honest. And and then you have the normal, I would say, transaction cost if you have a joint lead manager. So if it's a big transaction like 500 million upwards, then you have this joint lead manager management fees, which depend on the tenor of the bond, on the size and stuff like that.
We find that from the issuers that have gone through the certification process that the additional transaction cost beyond just issuing a normal bond is less than 1 basis point of the principal. So less than 1/100th of 1% of the principal that's issued.
Thanks, Rob and Uwe. Final question now. How about the risks of green bonds? What do climate bonds do to address the potential risks of issuers renegating on their promises? So with a bond investment, inherently the risks are fairly low. That's sort of a key characteristic of bond investments. So from a financial perspective, the risk is really covered by the credit rating and other things which are normally part of the due diligence when investing in a bond. In terms of green aspects and how it complies with the climate bond standard, we have a fairly rigorous process involving internal preparation and then external verification and then certification by our standards board. So there's a lot of checks in place. We also have a pathway if an entity decides not to continue to have enough or fund the right assets, then we work with them to try and figure out how that can be rectified. If they've made a decision to not go ahead with the label, not continue with the label, then of course the certification can be revoked. That's really a last resort. We find that the compliance regime we have in place is very effective so far. Thanks for all your questions. Just a reminder that this session was recorded. I'll send links out to all those who have registered. To keep up to date with all things climate bonds, including future webinars and our market analysis, you can sign up to them on our blog, climatebonds.net. Thanks for tuning in and have a good day.
Thank you.